Time for the market report, the latest WASDE Hour focus.
Yes, it is, and had a lot to say, especially for row crops. We'll get into that in just a bit. But first, the numbers. What were the week's biggest gains and losses? And then our in-depth look at this month's WASDE report. What were the details, the biggest takeaways, and the market's reaction? So, markets closed the week fairly split and looking slightly up, except for livestock. All down while row crops split. Let's take a look. Last week's biggest gain, lumber up $20.50, an over a 4% increase. The week's biggest loss, lean hogs, down over 2.5 cents, a near 3.5% decrease. This month's WASDE report recently dropped, a monthly domestic and global supply and production report released by the USDA. This particular WASDE had a good bit to say, especially in row crops. Looks like ample grain supplies both in the U.S. and abroad, while livestock on the recovery, at least in cattle. Here's Bella Bingham with the details.
U.S. wheat supplies down due to less production and harvested area, offset by slightly higher yield. Projected ending stocks also down as a result. Season average farm price unchanged from last month at $5.70 per bushel. Global wheat supplies projected upward due to higher production in Ukraine, Kazakhstan, and Australia. EU production resided due to high rainfall in France. Consumption and trade increased and ending stocks lowered. U.S. corn production up despite slightly less harvested area, bulked up by increased yields. Stocks down slightly as well, while exports up, especially for glucose, dextrose, and starch. Season average farm price $4.20 per bushel. Global corn production down due to cuts in the EU, Russia, Serbia, Ukraine, and Moldova, mostly due to dry weather. Imports lowered for Iran, Chile, Egypt, Nepal, and Vietnam, and raised for India and Zimbabwe. U.S. rice supplies lowered due to less stocks in production. Yield also down. Despite that, stocks are still higher than last year. Season average farm price unchanged at $15.60 per hundredweight. Global rice supplies also down due to less beginning stocks for Vietnam and the Philippines. World consumption and trade lower as well. Ending stocks down as a result. U.S. soybean production increased on higher harvested area and yields. The first survey-based soybean yield forecast showed yields up over 1 bushel per acre. Supplies also up as well. As a result, season average farm price lowered to $10.80 per bushel. Global soybean production raised due to U.S. increases along with Ukraine, Russia, India, and Benin. Exports also up. Ending stocks increased mostly on higher stocks in China, the U.S., and Argentina. U.S. beef production up on higher slaughter. Pork production down due to less slaughter and dressed weights. Broiler production up on recent hatchery data. Turkey production lower while egg production raised. Cattle price forecasts raised due to demand. U.S. milk production lowered from last month due to less cow inventories. Price forecasts for cheese, non-fat dry milk, and whey are raised while butter price is lowered. The all-milk price forecast for 2024 raised to $22.30 per hundredweight. U.S. cotton domestic use unchanged and beginning stocks raised slightly. Production down along with planted area. Ending stocks down as a result. Season average farm price 66 cents per pound. Global cotton production down mostly due to less area and production in the U.S. and India. Consumption also reduced along with ending stocks.
Now that you have the context, what's the market reaction to the report and what did it really tell us? Extension row crop economist Will Maples characterized it as bearish, especially for soybeans and corn, not too far behind.
So one of the biggest takeaways was soybean prices have been on the slide all summer, and unfortunately this report was just another piece of big bearish news on the market. So first, this report, WASDE this month, is the first one they incorporated in Farm Service Agency acreage data. So we expected to see acres on these planted acres numbers change for some of the crops. But for soybeans, unfortunately, we saw them add 1 million acres to their planted acres number. And then they also adjusted up soybean yields higher. So with this, that increased production, we're looking at a pretty large soybean crop coming on this year. So with that also, more supplies. We saw the ending stocks number come up to 570 million bushels. This is the highest level of stocks we've had on soybeans since 2019. So kind of coming out of those trade war years, we're kind of getting back towards those levels of stocks, unfortunately, in the soybean market.
Well, how do things look on the corn side then?
So corn, we expected it to be a bearish report. The market came in expecting it. We expected yield to go up because it's been a pretty good year so far with the weather. They did adjust corn yields up higher, record levels of corn yield coming into this year. They did adjust acres a little bit, but overall ending stocks did come down a little bit. They cut harvested acres. We expected some harvested acres to come down. They did do that. So it was still a bearish, we're still at a very bearish ending stocks number, production number on corn, but we did see a little bit of relief on that ending stocks number.
Well, how are things looking on cotton based on what the WASDE told us?
So we did see cotton production come down. We expected this. West Texas had some dry, hot weather, so abandonment out there in that region was shown in this report. They adjusted down the harvested acres. We did see 700,000 bales of cotton come off the ending stocks number, but kind of one takeaway those, they did cut 1 million bales out of export. But the positive was stocks are down a little bit, did provide some price support to the market.
And that's it for a deeper look into the markets. A single focus this time, but it was the biggest mover. Seems corn and soy growers are likely to see another bearish year while cattle producers continue a small period of bullish markets.